Hey, may pips be upon you. I hope your trading week was excellent. And I hope you avoided the USD trouble, when it went just berserk Friday afternoon. Oh, that was terrible. I hope you avoided all that trouble. Okay, RT money is growing personally. Uh, I've been studying, I've been doing a lot of back testing. A lot of things are coming together right now, and I want to take you with me. I want to take all of my subscribers and level up because I am leveling up right now, and it's thrilling. And I want to take you with me. Again, what I want to do is interact with you, the viewer. You, I'm talking to you. All right, I want to interact with you. What do I want to do? I'm going to put out my weekly forecast, my weekly forex forecast for the upcoming week, right? And I was thinking, you know what? It'd be better if I did it with my viewers, all right? And what I'd like to do is uh, get you to tell me to make a request of which pair you want analyzed. Any pair, all right? Other than exotics, I'm not doing exotics. All right, look at this list here. All the majors, Euro USD, GBP, GBP USD, or GBP JPY, NZD USD, AUD USD, USD JPY, whatever. All these pairs, also oil, the NASDAQ, Dow, or gold. I'm covering all of them. All right, that's like 31 instruments. Okay, so I'm willing to cover all of them. Just leave me a comment with your request. And I promise you, did you hear that word promise? I promise you I will take a look at it. Okay? And I'll analyze it. I will give you a bias and a possible setup. Okay? Now, another thing I want you to understand is I'm not just talking to swing traders. I'm not just talking to day traders. I'm not just talking to scalpers. I'm talking to all of you. I'm talking to all of you, and I'm going to go over all of that in the video, and I'm going to try to make it quick and comprehensive. Okay, as comprehensive as I can be, because I'm under time constraints with some of these things. Anyway, let me give you a taste of what I'm talking about. All right, look at this: Aussie, Japanese yen. All right, I want you to see, first of all, look at this market. This is the daily I'm looking at. You see that the market has been in an uptrend for quite some time. All right, we're going to connect here, touch here, and we broke that trend line. Right? What does that usually indicate? It indicates that the uptrend may be over. That's all a trend line does. They're magical, but not that magical. All right. So with that in mind, what do I do? What do I do is I identify the highest point. I say, what made that higher high here? Because this is a higher high. We've done nothing but make higher highs, higher lows, higher highs, higher lows, higher high, high lows, right? Until we got here. What makes that higher high is a higher low. Those are the structural points here and here. All right. This is the higher high, this is the higher high, this is the higher low. All right. Why am I keying in on those? Because those are the most important points. Because what this analysis is going to be based on is um, breaks of structure. All right. Here is the higher high. Here is the higher low. You're going to hear me repeat that in my analysis. All right. If price breaks this higher low to the downside, then we know a couple of things. One, that the bias, the momentum is to the downside. It is a bearish momentum. Okay. And this is a breakout once it breaks this pivotal structural point. The same thing goes for the higher high. Once that is broken, then we have a price. We have price. If it breaks like that, uh, we can say that the bullish momentum has come in. Sellers are stepping in. All right. And we look for price to make a higher, a higher low after making a higher high. All right. Now, there's a method to this madness. All right. And I'm gonna take you along, but you need to know those structural points and how powerful and pivotal they are, especially breakout areas where structure is broken, whether it is major structure or intermediate structure, which I call short-term lows. Short-term lows are important to mark. Okay, so if you get short-term lows being broken here, here. Why is it drawing like that? I don't understand. I'm not going to use that anymore. Oh, I see. I see. I see now. I didn't realize. All right. So you get this low broken, this low broken. All right. That's two. The second one is a show of weakness. And you know that there are more sellers here than buyers. All right. When we start to break structure, we know that the momentum is bearish. I won't belabor the point. You'll see it in the analysis. But anyway, with that in mind, what do we have for next week? We come down here. All right. What I want to establish first is, hey, was there a breakout? Was there a break of structure? Here, where's the structure at? Here it is. All right. And how am I going to label it? Break of structure, just like that. All right. When price breaks that, then I'm looking for what? This leg. I'm going to examine this leg to see if there's anything in here. What I'm talking about is a bearish order block. I'm looking for something in this leg that will potentially reverse price. Why? Because this has made the lower low. So what am I looking for? That's right. I'm looking for a lower high. Got it? So it's going to be somewhere in this leg. If it breaks this high here, what do we have? We have a break of structure. And that would mean price will probably be turning bullish. More sellers are present than there are, more buyers are present than there are sellers, excuse me. All right. Keep up with me, folks. So now I want to know what's going on in here, right? I don't see an order block here. The only order block I see is this one right here. This bearish order block right here. That's the only one I see. And that's not the color I wanted either. All right. Boom, 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 boom. Okay. All right. So what I expect is if price comes up into this area, price will fall because this is an untested, which means it's very strong, uh, potentially order block, and I'm looking for price to reverse from that. Okay, that's for swing traders. Swing traders, this is where you will be looking to make an entry. Now, what happens with day traders? You go down to the hour. All right, you go down to the hour, but you wait on the daily. Put your alert right here. Look what I'm doing. Put your alert right here. All right, add an alert and give it whatever title you want. Have that alert. As soon as that alert goes off, that's when you go down to the 1 hour. All right. Once price makes contact here, you want to see how price is making contact. All right. You want to see how price is coming into this which one I want? This order block. All right. What I want to look for is price making higher highs, higher lows, right? And then does it start to show exhaustion? Does it start to show wicks? Does it start to show failed attempts to get higher than that structural point? Are we failing to make higher highs and higher lows on this time frame? And then do we see a break of structure and a retest of that structure here? All right. There's a lot that goes into it. I can't go all into depth on it, but you know what to look for. All right. This will be your entry area. All right. And what you want to see is on this 1 hour time frame is price making an order block when it comes into contact with this higher time frame order block. All right. You want to see price make an order block like so. You want to see price make an order block like so. All right. And as it comes into contact there, and you want to see, let me make this a little darker, and you want to see price retest this order block. You want to see price retest this order block here, okay, and then fall. You want to see price uh, respect the order blocks. Does this retest make another bearish engulfer? And is that bearish engulfer respected? This is what you want to see happening on the lower time frames up in here. And now I am talking to the scalpers. Go down to the 15, man. Go down to the 15 and you're looking for the same things, right? You want to see price start to give those wicks of exhaustion inside of this order block. You want to see those exhaustion signs, and you want to see bearish engulfers being formed and respected. All right, you want to see the bearish engulfers being formed and respected, and you would love to see those happen at the retest of those bearish engulfers, those order blocks. All right, that's how you know the momentum is in your favor, and you know that you have a high probability of having a successful trade. I hope you caught all of that. All right. Go down to the 15. I personally go down to the 1 minute for my entries. Why? Because those give me the sniper entries where I could take a wrong one, where I could take an entry here, wait for the retest of this order block, and put my entry right there. Entry over stop loss over the order block that you are entering in off of, that impulse order block, and you want to target the lows along the way. Got it? Good. All right. On the 1 hour, I would be targeting the low of the where the breakout was of this break of structure. Those are the lows I would be targeting, just like that. You go down to the 1 minute, the 5 minute, or the 15 minute, and you get the sniper entries, the ones that are 5 pips or less, the ones that are 10 pips or less. All right. And that gives you your higher risk to reward. This is a 1 to 16 trade. 1 to 16 if you caught this entry. 1 to 16. That means if you bet $100, you bringing back home 1,600 bucks. Do you understand? If you were on a challenge, a 100K challenge with whatever prop firm, and they say, okay, you can't lose more than $10,000, but we need you to make $10,000. Dude, this is a 1 to 19. You could have passed it twice with one trade. You understand? This is for day traders. The 1 hour, basically for day traders. For 15, 5, and 1 scalpers. The swing traders, stick to the daily. Get your entries off of that. And when I'm talking about entries on the on the daily, what you want to do is, if you don't want to take those sniper entries, just put your stop loss over the order block in which you are entering. That's it. Too simple. And your trade is still a 1 to 5. You bet $100, you get $500 out of this. You put $1,000 on this, $5,000. That's it. That's 1% of your account size with any of your prop firms. You understand? You got 100K. You want to bet. You want to bet. You want to trade $1,000. Risk $1,000. You bring back 5 Gs. You understand? That's how you pass a challenge, man. Okay, so just put your stop loss over your order block, and you'll see that it doesn't come back. Price doesn't come back to test that order block. That's what the order block does. It protects the price at the top. It protects that that price point. You understand? That's what order blocks do. They block. They block it off. All right, and uh, that's about it. Now, hit me up. Okay, put something in the comment section. Let me know which uh, uh, let me know which pair you want analyzed. Let me know which instrument you want to analyze, and I will look out for you. And we'll see if we can move this thing right along. And I hope we have a great week ahead of us. Please enjoy your weekend. Take a rest. Leave the trots alone and just enjoy your family. Enjoy your friends. Enjoy some sunshine if there's some sunshine outside. Or hit the Netflix or something, man. Whatever. Watch a movie. All right. I'll talk to you guys in the very next video, and I'm looking forward to your requests.